Hello and welcome to Stocks Advisor channel. In today's episode, we will talk about MicroVision Incorporated, traded at Nasdaq, ticker name MVIS. Well, we see that MVIS indeed was growing from November period, and now after reaching the level of almost 25-24, it started its major correction. And what we see now is that recently, by beginning of month, we pierced little bit moving average at 50, the blue line, and by the way, we have here three moving averages. These are moving averages between 20, 50, and 200, being green, blue, and red line correspondingly. Here on the left, you see their legends. So indeed, the price action, which was enormous, we took almost from the level of 2 from beginning of December to 25. So more than 10-12 times growth, which is enormous, of course, and also price was going really oversold RSI wise. Now, after having the major correction and rebounding from moving average 50, we are now sitting at moving average 20, being today minus 11. Also quite big move, not maybe that much visible on this bigger scale, but the question is what's next, and it looks like it's a secondary wave might be opening for going down. So in general, there are two possibilities happening. So first is a formation of triangle, kind of for longer period. This is especially important for those who are more midterm traders. So if you would look here, it could be that we are about to form kind of triangle here, if you look carefully. But in general, this is one possibility. So if this is indeed happening, then we should rebound from the lower level, and let's name it R1, R2. So if this would be the case, then we will rebound from R1, R2. But if not, if we have, let's say, another formation, actually breakage of the trend, and speaking of the trend, you can clearly see there is a trend formed here, and then actually it would mean that the rebounds that we saw by beginning of March from moving average 50 was kind of a double support rebounds from this current trend, let's call it T1. So if it will be the trend breakage that we would observe, then we could go for the lower level. So in both cases, we need to be prepared to enter here to average down, because also you could see that moving average 50, the blue line here, is bending downwards. So it's still flat, but could start descending. And although when other moving averages are still going up, but they are also going with some deceleration, meaning they are kind of bending. So if you look at them, moving average 250, they are kind of bending. So their second derivative is going, let's say, more and more to zero level, meaning that there is deceleration. Also, if you look at RSI behavior, it looks like it's still bouncing, but it might make a secondary wave down. Also, if you look at MACD, after having double negative wave and little bit touched upwards, it looks like we're again going for second negative wave, which is the classical pattern for both actually. If it goes really like this, it will be breakage of the T1, but if it will be a small dive in and then bigger wave like we saw by February, it could be actually triangle kind of confirmation, and then we will grow higher again. So two possibilities, but the beginning for the trade to appreciate both would be the same, meaning that we should enter from anything between 1240 and actually 1450. Not easily seen here, but we will write it here, because this we will be lower than T1 trend if it's pierced, and we will be just a little bit higher than R2. So it will be between 1240 to 1450. And with this being said, we could actually enter there. Still, what might happen tomorrow, we might still go up. It could be red-white combination, but then it would mean we will just rebound again from R2 and go lower. So it's not that this opportunity to enter into this first channel will come immediately tomorrow, but it is coming. It should be coming, at least according to the technicality of the stock behavior. And so once it's there, then you can rebound if it will be triangle formation. And if it goes lower, you just start averaging down. And about taking profit, usually we advise 10 to 15%, but again, this is very fastly moving chart, so it's 15 to 20% advised to take as a profit once you can have it and really take it, because the profit taken is taken indeed, meaning once you press sell, these money are yours. Otherwise, they are still in the play, and on these fastly moving positions, everything could happen. So try to develop the strategy of trading positively again and again rather than trying to become rich from one trade. So this would be the first entry opportunity. And if this is again the triangle formation R1, R2, you are just rebouncing. But if this is the breakage of the T1 trend, the decline could continue further because, as just mentioned, it might test lower levels than 10 because this would be the secondary cascaded decline. And if it will be indeed this one, then it might be the formation of the lower trend here. Let's name this one R3. And also you could see that this is within, let's say, the next support level that could be seen here being just between 8 and something about 940. So therefore this would be the next level to enter if we continue decline. And let's write it here again, still within the possible technical correction, although quite low, but also the growth was enormously high, so it could be descending also very strongly. So between 6 and 940, of course, between 8 and 940, of course, also very big channel. And we will talk now how to enter within those channels slowly, because it's also another, let's say, notion you need to have in order not to just buy at the top or waiting without buying till the bottom of the current channel, because then you can also lose the possibility to buy. So you need to appreciate both situations. And then what happens if negative catalyst kicks in? This is also very possible. It's not that it's coming, it's not that it's given, it's not that it is expected, but they can come, negative catalysts can come any moment for companies. And this is part also of our let's say, mixed analysis and risk mitigation strategy, because we always in our analysis do so-called mixed approach, meaning that we do technical analysis, we do non-linear averaging down based on support resist levels. That's what we discussed with entry levels. And the third one is mitigating of the risks. And risks mitigation is being ready to enter if needed, not necessarily given, but if needed, to enter at the principal support levels such a way that when others will be taking those, you just enter and you average down and you exit with the profit. It still might take you a little bit longer time to win, but you either win or exit with a draw. So this is the idea, rather than you just take a loss and then just kind of do stop loss strategy. Because stop loss strategy, it's something for really those who trade momentarily daily, as we think, but for those who are more like, let's say, daily traders, but really daily traders, not 15 minutes or 1 minute candles traders, for them it's still maybe better to wait a couple of days, but then exit still with a profit. So with this, within this philosophy, we need to be prepared for a severe average down based on risk mitigation, and again, not given to be expected, but to mitigate risks. Then anything below moving average 200 and the next level would be a very strong entry opportunity here. And of course, then if you look at it, you could see that the strongest principal levels to enter is here. It opens here and goes all the way to here. So it will be between 390 to 490, let's say, and this should be, yes, it's very low, of course, not expected at all, but if negative catalyst kicks in, especially not forgetting where this position was, where this stop was just a few months ago, everything is possible, and then you will be very well prepared and secured to average down if needed on very negative catalysts on these levels. And again, whenever the rebound takes place, do not hesitate. Once you can take profit, take it 15 to 20% from the money allocated here, and then either re-enter or check other opportunities at our channel. You can also find many, even up to 5 weeks ago placed at our channel, are still fresh and available, especially if the situation there goes to for lower levels. You could be just in time to enter and make your profit there. So with this being said, this is the numerical card and this is the graphical representation if you are more for it. And speaking of how to enter, it's still quite classical trade here, although on very deep levels. So it's 1-2 strategy, meaning that the money you would like to play here, you can split in 5 portions, and then you can buy with 1 portion in the first channel, you can average down with 2 portions in the second channel, and you can average down again if negative catalyst kicks in. And now how to enter within the channels, because they are also quite broad. And the question is, where should you buy, at the beginning or the bottom or in the middle? Well, you need to buy everywhere, and it means that the money allocated per channel, you could also sub-split. Let's say, for example, you are about to enter in the second channel between 8 to 9.40. So you can take these two portions allocated there, split it on 2 or 3, let's say 3 portions. And then you can enter at the beginning of the channel with one and the sub portion, then somewhere in the middle with second sub portion. And you can buy with the third one at the lower part, or at least a little bit lower in the middle, so whenever you see that it's not going to make to the bottom, you can buy again, up to you. So this way you will be closer to the middle or to the bottom, so whenever the price action takes place and it goes high, so you will have the best profit, the best opportunity to make the profit on the rebounds. So this is the idea, and usually we also do it like this. So just start buying slowly through the channel. Once it's activated, you can start entering there, and once you see you are already returning, just put all position in this allocated for this channel and take it there as well. So that's the way to trade within the channels. So this is the situation for MicroVision for the coming weeks. Good luck with it, and see you at another episodes of Stocks Advisor channel.